welcome to this episode of the Note Close Show. As always, Scott Carson. Excited here to be with you guys today. Hopefully, you all had a great weekend. It's Monday. We're going to get a case study here really fast on a performing note. But I just want to say I like real estate investing, especially like note investing, because when you have things that happen on a Monday like today with the market kind of taking a tank, investment companies, Wall Street firms closing trading to retail investors like you and me, it really tells you how rigged Wall Street is. The stock market is rigged out there. And that's one of the things I'm very anti-against. I mean, yes, there's some things that are good. But most of the things, when you see things like happen today, like what happened years ago with the GameStop and the Robinhood aspect of them shutting down and stopping people from being able to trade it or buy it, just as a shitty way of doing business. And that's crappy. But today's episode, I want to talk about how you can make an 18% return on a performing note. If that interests you. And no, you don't need to have millions of dollars to do this. This is a deal that's about $50,000. And we came across it from doing our normal research on Mondays. And I thought it'd make a great deal. I think one of my students has already made an offer on it, which is great. But it tells you the kind of opportunities that lie out there, that things aren't always rigged. Yes, I think Wall Street is rigged. But if you're smart and educated and know where to look, you can find deals that return a double-digit return to you. And so this is a deal that I actually was pretty excited about. I thought it was a great case study to talk about. It's a performing note, a newly originated performing note from about 4 or 5 months ago. And it's got an interesting story, some things to watch out for, but I thought it was very interesting to go through based on the research that we pulled. But this is in Detroit. No, I'm not going to disclose the address to you. We came across it. We dove into it, looked at it, did some research on the property and stuff like that. So it is it's a performing note that was just originated a few months back. But I want to go through where you might see the opportunity. And it's kind of an interesting tale of the tape that's going on. But it's not a bad-looking house. This is a picture off the Redfield listing from a couple months ago. It's not the biggest house, but it's very cookie-cutter, small, 3-bedroom, 1.5 house. And so let's go through the details. It's in Detroit, Michigan. That's a better picture of what it looked like from what we pulled online. It's a 3-bedroom, 1.5 bath, 1,000 square feet. It's on a 6,500 square foot lot, give or take a few feet, a little bit over 6,500. It was built back in 1945. Obviously, it's been updated since then. We didn't get any interior photos, but that's okay. You're buying the note. Somebody's living in it. Somebody has bought this property on owner financing, and the holder of the note is looking to sell the note. And it sold in February of this year. So it's now August, sold 6 months ago. No, I'm sorry. Yeah, 6 months ago for $75,000. Okay. And as of we're doing this in August. All right. August. That's what it is. The property, when you drop this property into Rentometer to take a look at it, rentometer.com, it pops up at basically around $1,299 is the median rent. It's get a little bit higher. So $1,100 to $1,300 a month in rent rates for you. It's sold. Here's the story behind the story. When you look at a property, don't just look at what it sold for recently. Okay. And it says it sold for $75,000. But when I went and looked at the history, and that's what's great about Zillow, hopefully they stay in business, is you start looking at the history, it'll start telling you the picture. So originally, going back to last year, in November, it sold for $40,565. Okay. It was immediately relisted in January of 2024 for $49,000. Okay. That's the funny thing, is who the note holder has bought the property, turned around and listed it at $49,000. He removed it in April. Oh, sorry. I apologize. That should be 2022. Sold in November 2022 for $40,000. Immediately listed it at $49,000. Removed the listing in April, and then relisted it at $60K in December. I've got it off a little bit. So 8 months of trying, literally about a year trying to sell it. Okay, at $49,000 or greater above what he paid for it in November of 2022. So he relisted it on December of last year at $60K. Traditional sale, right? Well, how did we get it to $75K? That's a 3-month difference. How to go up by $15K? So what happened is this guy bought the house at $40,000. He turned around and tried to relist it at $49,000, $50,000. couldn't get it, dropped it down to like 47, 48, took it off the market for a little while. In April, he took it off the market, relisted it in December. I don't know what he did with it, whether he updated it or rented it out. I don't know what he did. Didn't tell us. Okay, I couldn't find that information. But tried to sell it for 60 again. That didn't happen. But then he got a buyer to buy this property. Now, what happened? It was a contract for deed. Remember, it was listed for 60 in December of last year. He creates a contract for deed, finds this buyer. Buyer comes and wants to buy it with owner financing. It's interesting. And so they did an owner finance contract for deed. It's not a 30-year mortgage. Basically, it was an 84-month. That means 7 years at 8.5%. And the guy financed it at $75,000. The buyer bought it from him at $75,000. Okay, brought $7K down, and so the seller of the property, or the guy that bought it for $40,000, basically was carrying a first lien at $68,000. Now, the way they structured this, he structured it knowing that he's going to take a discount to sell the note. I'm going to sell the property above value or value what I could sell it for. Since I'm offering owner financing, I'm going to get a chunk down, carry financing the rest, and sell the note off. And that's exactly what it looks like. The P&I payment on that $68,000 first lien is $1,100. So it's a little bit below market rents, $200-300 below market rents. $1,100 is just P&I. There's no taxes or insurance added to that. So that's separate. So far, 4 payments have been made because the loan closed 4 months ago. So as of the time that we're doing this, 4 payments have been collected. I think the 5th one is due any day or has been paid any day. So the UPB is roughly at $67,000 and some change. The seller has listed this note for sale or wants $51,000 for it. Now they are carrying a note for basically just over $67,000. They're trying to sell it at $51,000. Okay, selling it at a $16,000 discount. Now, the old listing back when this property was really listed for $60,000 says it needs some TLC, small TLC, but it's a glowing listing, not a lot. I wish there's more photos to show that. We searched for the property for more photos, couldn't find it. But this is a current one taken. I'm like, okay, it doesn't look too bad. If somebody's living in it and somebody's making payment on it, they've probably updated it to get rent ready. Okay. The property lies just south of 8 Mile Road. So it's not the greatest of areas, but it's also not the worst of areas. The neighborhood looks pretty nice when you look at the Google Maps. All right. So let's go back. He bought this note for $40,000, tried to sell it for $49,000, couldn't do it, tried to sell it for $60,000, couldn't sell it traditionally, got somebody interested to come in and buy it from him on owner financing, did a contract for deed at $75,000. The guy brought gal brought $7K down. He carrying $68,000 for 7 years. Now trying to sell the note at $51,000. So let's talk about what the seller is going to make out of it, because we kind of have the numbers behind the numbers. Wouldn't you agree, ladies and gentlemen? Right? So the guy that owns the contract for deed right now, the guy that owner finance doesn't own the property, but the guy that holds the contract for deed, he's basically the lender. So he purchased this at $40,565. Okay. Selling the note at $51,000. That's basically what he's selling the note at. Okay, there's more owed on that than $51,000. But he's accept $51,000. That's a $10,435,000 profit on the note sale. That he's held that property for about a year. Okay. That's not a bad return. That's about a 25% cash and cash return. But there's more to this, right? What else have this guy collected? Well, he obviously got a down payment for $7K from the buyer who bought this, the borrower on the contract for deed. And he's also, as of the time that we pulled the information, the time from the spreadsheet, it shows 4 payments have been made. There's still basically 80 payments or 79 payments left to make. So he's collected 4 payments of $1,100 at least, probably 5, but we'll just say 4 at $4,400 in that profit going in. Okay, so you add all that up, $10,435 in the note sale plus $7,000 in the down payment. Now, some of that it's probably been removed because of closing costs and things like that. I don't know those numbers, but we're just saying, let's say gross on this. Plus $4,400 a monthly payment so far. That's $21,835 in gross profits. Okay, that's not too bad, right? Now, that's presuming he used his own money, $40,565, to buy the property originally back in the day. If that's the case, then if he sells this note by November and doesn't collect another dime, it's about a 53.8% cash and cash return. $21,000 over $40,000 That's understand that 40. Yeah, that's 53.8. He gets 4 more payments, 3 more payments. That's going to be another $4,400. That's another substantial. He could potentially be looking at making another 10-15% on this deal after closing costs and stuff, right? Okay, that does not include 3 more payments if he sells this August, September, October, November. Okay, 3 to 4 more payments. That's not included in this. But if he sells it as is, doesn't collect any more dimes, that's a pretty good cash and cash return for somebody who's basically bought a property and flipped it in about a year, right? Flipped it on owner financing and selling it up. If he gets 51 for it. Now, there are some flags about this. Is this a deal for you? And these are things that you should always, always, always look at. Okay, it's an important thing, and these are why you look back at the history of a deal. Now, if you're thinking about this, what pops up as red flags? Well, that is a less than 1 year season note. That's the first thing for me. While Zillow values the home at $77,500 based on recent comps, what concerns me is what? Well, he couldn't sell it for $60,000 traditionally a year ago. And now it's right, you can buy the note at $51,000 as is. Guy probably take a little bit less. So if you're buying the note at 51, based off the $77,500 Zillow value, you're technically buying that at 66.23% of fair market value. If you compare that to the $67,000 owed on the unpaid principal balance, you're buying at 75.7% of UPB, which at buying a performing note at 80 cents or less of UPB is not bad. That's kind of normal, right? The thing that concerns me is seasoning. How well is the packet underwritten? You know, the contract for deed, the financials of the borrower. Is it serviced with a third-party servicer? Basically, though, the thing that does concern me is that if you buy it at 51, you're technically buying it at 85% of the listed price as of December last year. Okay? December of last year, they listed that thing at roughly that 50,000, 49,000. Oh, no, I'm sorry, at the 60 grand, sorry. Okay? Now, based on if you buy it at 51, current cash flow, you're going to see about an 18% give or take ROI. Not bad at all, not shabby. That's a deal for days off of that. But you got to be careful on a couple things. The first thing is it's a contract for deed. And in Michigan, this works your favor buying contract for deeds in Michigan, it's not a foreclosure process. It's a eviction process, providing that the borrower did not put more than 25% down at the time of the purchase. They put $7,000 down. That's less than the $10,000 that financed, or basically sales price is $75,000 at that point. So no, less than 25%. This is an eviction in Michigan, which is pretty relatively quick, 30 to 60 days if it turns non-performing. That works in your favor. Okay, you're potentially moving into an asset at worst case, 60,000 or 77,000, depending on what the markets are. Okay. The thing that does concern me is the landlord, the borrower on this is basically breaking even right now. I mean, if it's $1,100 a month payment and median rents are somewhere between $1,300 and $1,400, I'm not making a lot of money. So if the renter doesn't pay, it's a chance that the note can default. Okay, I don't like that if there's a tenant in place. I'd offer less than the 51. And that's my personal opinion. I think if you look at these numbers, it would probably take less if I can close quickly, if everything looks good. I'm still going to pull an O&E report, an ownership and encumbrance report, to take a look at it, making sure it's clear title up to the point that the contract for deed was created. In the old listing, this is they're willing to give a warranty deed, so they've hopefully cleared up the title, anything outstanding there. So that's a good thing. Here's the thing. Could you buy this note and flip the note and make some quick profit? Of course, you're buying it at an 18% return at 51. You could potentially turn around and sell that note at a 12% return, get 55, 60,000 for it, and sell it to somebody at a 12% return. That's not a bad day. Put 5 or 10 grand in your pocket. Wholesale the note right now, $5,000 to somebody else. You could buy with cheap OPM, other people's money who want a 10, 12% arbitrage. It make the difference in the cash flow monthly. If you're borrowing, let's just say if you're borrowing $51,000 times 0.1, divide that by 12 months, basically you're paying your investor $425 a month while $1,100's coming in. That's a $675 profit monthly, thing about that is you definitely would want to sell this note off before the UPB gets down to where you borrow that 51,000. You have a few years, probably going to have 2-3 years of cash flow on that, and then either just assign the note over to your investor or sell it off and walk away. Okay. The risk to watch out for this is obviously the number one underlying factor is what's the true value of the property. Just because they sold it on owner financing at $75K a few months ago does not mean the property is worth $75K. I think the property is more worth $60. Maybe they've done some upgrades to it. Maybe the comps have gone up in this area. Who knows? Don't know that until we actually talk to an agent. Okay. I don't know what kind of work the borrowers put into it. Obviously, if they are getting it $1,300, $1,400 a month, they've put some upgrades into it or cleaned it up, and maybe that's where the new value of the property. Those are things that you want to find out. Take a look at it. Of course, always double check the collateral, the title work, look at the contract for deed, make sure it's written, making sure you have the right to foreclose, make sure everything is clean on that. That's the biggest thing out there. And of course, the most important thing also besides the value is that the borrower is not, that the guy that is holding this contract for deed is not self-servicing. I do not want them to self-service. I need them to be with a third-party servicer. If it is with their self-servicing this, I would be looking to like I said, underbid that 51,000, 48, 47, 45, if that's the case. Now, of course, if I buy it at 45, I'm probably going to see a much higher yield, but that's the risk I'm taking for buying a newly seasoned note if those things don't pan out. Now, if all those things pan out, the value comes back at 77. It's clean collateral file. He's using like an FCI or a Madison Management or an Allied for servicing, and they can show payment history. Great. The closer to 51, I'll get it. But the borrower said he was willing to do that. And look, they've got a chunk of money there. If they sell it at the 51, guess what? They're making a nice chunk of money. They're, nothing against people making money. 18% is not a bad day either for your IRA, especially on a day like today where the market's down 15, 20%. Okay. But this is what we do. If you're listening to this, make sure you click on the link in the description, go over and watch the full breakdown of the numbers. Hopefully I explained it easy enough for you. This is not a retire early type of deal, but it is a nice deal to put into your IRA for a period of years. Yes, the borrower is going to pay this loan off in less than 7 years. And yes, you can make a 20% return, potentially give or take a little bit, but anything over 12 is not a bad day to have that return for 7, 8 years, 9 years, maybe. Who knows what's going to happen, or sooner. Maybe they pay off, they refinance out of that 8.5% if rates do drop down below that. But it's not a bad day, not a bad deal. If you'd like to learn how to do this, go to weclosenotes.com. That's my main website, weclosenotes.com. That's where you'll find our podcast episode and all our different things. My gift to you guys is we have a one-day class called noteweekend.com. If you go to noteweekend.com, sign up for it, no credit card required. You'll have access to our one-day class, which is on the basics of note investing. But really, the nuts and bolts of what you want to learn how to do this is really you want to go through the Note Buying for Dummies workshop. That's a 3-day class, 1 day on finding deals, 1 day on funding deals, 1 day on making money and the different exit strategies, how to structure these types of deals. We're the best at what we do. Yes, the recordings are included. Normally it's $997. If you get signed up, it's a 50% discount for $495 or $498.50. It's the cheapest out there and the biggest bang for your buck. And our next class is tentatively scheduled for September 13th, 14th, and 15th. That's a Friday, Saturday, Sunday. That's online, so you don't have to jump on a plane, go rent a hotel. You can learn from the comfort of your own home or office, from your pajamas or from your desk or from your couch or your office. So I encourage you to do that. Go to notebuyingfordummies.com, get signed up for it. We're going to be featuring more and more deals like this. We'll probably do 4 or 5 over the next 2 weeks on this type of deals like this as we come across it. And we want you to learn. Now is an opportunity to take advantage of what's going on in the market. Not only residential, but the commercial stuff. It's the same premise: buy cheap, buy at a discount, reinstate, buy that debt payment, whatever that is, and put money in your pocket at above average returns. But anyway, that's the deal on this one, everybody. Go out, take some action, go buy some notes, reach out to me, talk with scottcarson.com if you have any questions, or click on the link below in the description, and let's see you guys at the top.